Felix here, and the Fed has just pulled its last card to tank the market. Very smart move. Should you be concerned about it as a small investor? Well, you need to understand what has been happening today. So J Powell couldn't really come out and say, I'm going to raise rates more than previously, because he always says it's based on the data and we decided on the day of the meetings. But what he did do is he said rates could stay at higher levels for longer. And that was kind of the last ace he had up his sleeve, and the market hates it. The 2-year bond yield is shot up today to almost 3.5%, and that basically tells you to what point the market expects interest rates to go in the next 6 months or so. So that's kind of in line with what the Fed wants. The Fed wants about a 3.8% interest rate, but the market had previously priced in that these rates would come down in the first half of the year, definitely around the middle or part of 2023. And J Powell, very, very cleverly from his point of view, has taken that away from us. So now we have to expect these higher rates to stick around for way, way longer than we would like. What does that do? Well, a 1% interest rate hike takes about 9% away from the valuation of a growth stock. What's a growth stock? It's the kind of stock where we look for future profits, future earnings. That's where the big part is of the business is. And at the moment, everything they're doing, we sort of think, well, it's all very nice, but it'll be 10x in a few years, 5 years or 10 years. So those stocks are getting hit the hardest. The big tech stocks also getting hit, the Microsofts, the Googles and so on, down almost 5%. So is this an overreaction? Yeah, I would say so. I think the market tends to overreact on this news. The day after, the market kind of thinks, well, we probably overdid it a little bit, and bounces back. So watch out for a lot of volatility. The call options on the VIX, which is the volatility or the fear index, as some people call it, have just spiked up, and that's usually an indicator of volatility really going back up. So expect a mad start to the week again next week, though I am feeling a little bit more bullish on the market, considering how strongly in a negative way the market's reacted. If you enjoy this kind of macro update, do hit that subscribe button as I'm multitasking, driving, and the commentary. I truly appreciate you tuning in. Thank you very much.